Hey everyone, me Kevin here. Let's talk Tesla. Wow, yes, we did get a beat on deliveries. We beat deliveries at 484,507 versus the 483,173. But what are some of the details we got to talk about regarding not only what beat in terms of deliveries, because it wasn't the Model 3 and Y, which is really interesting. What about Morgan Stanley? What does Morgan Stanley say, and what wording does Morgan Stanley see for the stock? That's a big deal. What does Gordon Johnson have to say in a tweet reply to my quote tweeting him? We'll break down that drama, as well as what could margins and cash flow end up looking like in Q4. That's going to be the big old question. So first and foremost here, these are the Tesla production and delivery numbers here. As you can see, we actually missed on Model 3 and Model Y numbers. We came in with deliveries of 461,538. The market was expecting 462,523. So wait a minute. How did we miss when everybody's screaming about a beat? Well, where we beat was in the other models category. Other models came in a few thousand above expectations, leading not only the total number to beat, but offsetting the Model 3 and Model Y miss. Now, in this other models is expected to be Cybertruck information. Elon Musk on Twitter, as of about a week ago, indicated that maybe Tesla would deliver a couple hundred Cybertrucks this year. That's not produced, that's delivered. So we're probably somewhere around 200 to 300 Cybertrucks actually getting delivered this year, which means most of these beats probably came from Model S's and X. Now that is actually really impressive. This morning on the Market Open live stream, which keep in mind, some people are not aware that I do Market Open live stream every day at 5:30 or 5:25 in the morning, California time. Just go to the Meet Kevin Live channel. It's linked down below. Anyway, I'm there every single day and we're covering the market. But this morning, what we thought was really interesting was we were covering Tesla. And as we looked at the vehicles on Tesla, we realized that the cheapest Model X is actually sitting below $80,000 now. You go to purchase price, you're sitting at $79,900, which I think is a great value. I don't know that it makes sense to spend an extra $15,000 for, 1.3 seconds. I personally don't think that's worth it. I don't think that's a good investment. That's like a vanity item, right? Fine. Sometimes we want to reward ourselves, so to speak. But anyway, look at the Model Y. I personally think the Model Y is a deal. And that's actually where you would expect Tesla to make a whole lot less money. Because look, you could get the rear-wheel drive Model Y for under $44,000. You're basically getting a 10% smaller car for roughly half the price. The Model Y is a steal. I personally think so. Now, I know the rear-wheel drive model's got 260 miles of range, and I know it's not the longest, but the point is, the fact that other models beat expectations here and offset a Model 3 and Y miss is probably margin accretive to Tesla. It is a good thing for Tesla and Tesla investors because we want to see margins going up, not down. In fact, let me tell you what Morgan Stanley's biggest concern is for Tesla. Are you ready for this? This is in a note released this morning. Morgan Stanley, this is just a tiny little snippet here of their entire piece, but in this little snippet here, we would not rule out the potential for Tesla's gross margin to test 10% for, maybe one of the quarters ahead, which somewhat implies that the bottom is still ahead of us for Tesla's margin. And then maybe their core operating margin could actually end up flipping to negative. Now, the company is still optimistic. They still maintain their $380 price target. Not only do they maintain their $380 price target, but they think that the Optimus is going to be a big potential solution to what they call the $30 trillion labor market. They reiterate, which we've talked about before, this idea that, hey, Tesla could make a lot of money getting into Dojo as a service, much like AWS now delivers about 70% of the earnings before interest, taxes, and depreciation over at Amazon. That same thing could happen at Tesla. So in other words, Optimus bullishness, Dojo bullishness, that's great. But they do think there's a chance you could go negative here with margin in the next few quarters, or at least see more of a fall down to potentially 10%. Personally, I don't know why they didn't address it, but they didn't address this. Maybe they drafted most of the piece before the numbers came up because, they didn't want to wake up early or whatever. But the fact that other models here beats, to me, is a sign that margin might actually come in better than expected. Commodity prices have come down. Now, we know there's a lag in when commodity prices come down to when those actually show up in vehicle margins. But look at, for example, lithium prices. Go to a website like Trading Economics and look at lithium prices. And then let's zoom out a little bit here. Let's just go out to the 5-year chart. Look at that collapse in lithium prices. Commodities have essentially just been coming straight down over the last 6 months. A little bit of volatility around March and April there. This should be good. I mean, look at another one, BCOM Index. So type that into Google. You get the Bloomberg Commodity Index. Get rid of the little spam that pops up. Then just zoom out for a moment. Go, well, year to date doesn't do us any good anymore. Go 1 year back. Look at this. The solid, almost perfectly straight trend line of a declining commodity prices. Go to the all-time. We should be a little higher still today. Oh, no, look at that. No way. We are a little higher than where we were in like 2018 and 2019. But we're actually way lower in commodity prices than where we have been really in any of the period between 2015 and 2002. Kind of wild. But the point is those sort of declines should slowly start showing up in margins. So I think lower comm prices, lower lithium prices, and a richer mix of vehicles should all be beneficial to Tesla's margins for their earnings coming up on the 24th. So that is a good sign. Now keep in mind, I say this every single time with Tesla, good news usually is around production and delivery numbers, okay? That's like, that, and even if it's bad news, that's usually the best possible news you're going to get, right? So even if it's bad news, it is the best news because it's still like the positive stuff, like how many vehicles did you deliver? Usually the bad news comes out in the actual earnings report, which that's when we look at the details and we're like, that's not as good as we thought. So my concern would be not that margin comes in weak, but instead we end up getting a free cash flow number that's not as juicy. Although I'm also not really worried about that this time. I was more worried about that in previous cycles. I'm not as worried about that in this cycle. Look here at Tesla's free cash flow. We had a free cash flow here in the last earnings cycle here of just over $800 million, which we can get just by subtracting the operating cash provided from CapEx over here. And before that, we were sitting at about $1 billion, right? So it's somewhat been trending down here. But the point is, I was looking for 400 million that cycle, and we got almost twice that. So they did very well here. I think that with lower costs and higher margin from some of these vehicles, I actually think that there's a chance with Elon Musk tapping the brakes on CapEx, which he implied in the last earnings call, I think this could actually be a positive earnings report. And I've been pretty negative going into the earnings reports. I usually see them as like a sell event, which then they usually end up being a sell event. I don't think this one's going to be as bad. Now, Gordo and I were arguing, well, not really arguing. I mean, it's Gordon Johnson. We always like to get his bear perspective. I like to see it. So I was looking at it as, I respect everybody's opinion. I have no problem with anybody else's opinion. So Gordo says Q4 deliveries, 20% year-over-year growth, the lowest since Q2 2020, the height of the pandemic. Keep in mind, he's not wrong. I mean, the growth, the headline growth has slowed down at Tesla. And we want to see as we ramp Giga Berlin, Austin, and Cybertruck, this move up. We got to get back to 30%. Morgan Stanley, by the way, I think they're at 27% EPS growth projected for their math. Yep, 27% CAGR on EPS. I'm at 30%. So I've been off 50% for a very, very, very long time. I'm at 30%. Morgan Stanley's at 27%. But 27% top line growth, not great. 20% that is. Then you've got, Gordon's multiplying here, cost of goods sold to get some cash burn. That's okay because they're probably still cash flow positive, but we'll find out. This idea that the Cybertruck is a mistake, I mean, to me, that's an opinion. I don't think that's a big deal. I don't think it's a mistake at all. But that's okay. Bull versus bear here, right? That's an opinion. That's fine. But this is interesting. He says BYD sold more battery electric vehicles versus Tesla, as some of Tesla models lost their full tax credit. Well, okay, it's not entirely untrue that some Tesla vehicles did lose their tax credit. Like the cheapest Model 3 did lose its tax credit. But it's worth noting that the cars eligible for the federal tax credit of $7,500 shrank a lot. Literally shrank by like 50%. And so a massive shrinkage here in the number of cars eligible. So you can now, if you want the $7,500 tax credit, these are the only vehicles eligible for $7,500. You ready for that? The Bolt. Okay, who wants that? The F-150 Lightning, which barely has enough production. Rivian does not have a single car with $7,500. And then what do you have at $7,500? Tesla Model 3 Performance. The Model X long range qualifies for $7,500. Holy crap, that's amazing. Use metkevin.com/Tesla as a referral code. But anyway, or is it Meet Kevin? Oh, I should check. metkevin.com/Tesla. By the way, if you go to meetkevin.com, yeah, it is Met Kevin. Met and Meet both. The Gold Course, we are replying to emails this morning so we can get that all caught up. Once we have everybody caught up in email this morning, we're raising the price, so you still have a few hours here if you want to get in the Gold Course, lifetime access to the course member live streams, and all the other new content, all filmed within this quarter. None of it's repurposed content. It's all brand new. But anyway, look at this. Model Y all-wheel drive, Model Y Performance, Model Y rear-wheel drive. Tesla's killing it. I mean, yes, okay, one of the vehicles lost the $7,500, but relative to the rest of the EV community, Tesla's like the only one. I mean, Rivian's, their cars are at $3,750, half of the tax credit. So the government's actually incentivizing Teslas over Rivians. Rivian missed this morning. They're really a topic for a different video. Actually, I don't think their miss is that big of a deal. I've actually been surprisingly becoming a little bit less bearish on Rivian, even though in the past I've shorted them profitably. I've become less bearish on them because I think they're finally getting their act together and they're surviving some of the real pain here. But anyway, this argument here, BYD sold more battery electric vehicles than Tesla. Who cares is sort of my argument. So I quote tweeted this. And I wrote, yes, BYD may have sold more battery electric vehicles than Tesla, 526 versus 484,000. But let's not forget, BYD sells cars at an average of $25,000. Tesla sells them at an average of $46,000. So you make a lot more money at Tesla. Now, yes, Tesla's operating margins have fallen. This is true. Gordon Johnson hits on that right away. It is a bear argument right now. Is that Tesla's operating margins aren't excellent right now. And we can see that actually just by going to their last earnings report right here. Let's go to the actual income statement of operations here. So this is it. I'll hide myself for a moment. So what you can find here is income from operations sits at about 7.5% of total revenues. So right now, 1764 operating income divided by all of their revenues is only 7.5%. That's very low. BYD sits at about 8.9%. So they are beating Tesla on operating margins here. And if you want to get even more nasty to Tesla, just subtract their operating income or subtract regulatory credits from their operating income. You're left with only about a 5.4% operating margin. It's low. It is low. Now, one of the reasons that operating margin has gotten so low is mostly because those revenues have really stagnated, whereas those operating expenses have not, right? Look at, for example, our operating expenses. Operating expenses were $2.1 billion. They went up to 2.4 at the same time as revenue declined about $1.5 billion. So yes, absolutely. Operating expenses have risen as the company is scaling, as the company is adding more facilities, SG&A, obviously the scaling their manufacturing plants, but some of that goes into COGS. But still, you have to build out the hiring, the human resources, the regulatory work, the legal work, and all of this. So your SG&A, your general operating expenses go up. At the same time, you're spending way more money on R&D, now expanding into the Dojo and Optimus world, not just R&D for the cars. So yes, OpEx is going up at the same time as revenues did take a hit, likely, in my opinion, due to interest rates. The fact, though, that we're able to see these numbers at Tesla at a time when Tesla had the worst interest rates ever in the career of Tesla in quarter four, the highest interest rates ever. Okay, remember October is part of Q4. That's when interest rates peaked. And we got a beat on deliveries here? I have to say it's pretty impressive. It is pretty impressive. In fact, take a look at this. This is a chart here that overlays finished vehicles and inventory versus days of inventory. And what you could find here is that vehicles in inventory actually shot up about 10,000 vehicles right here, but days of inventory is almost flat. In fact, days of inventory has really started to flatten over here. That's despite production either going slightly down or up a bit more than that. So it's a sign these vehicles are selling, which is good. And again, the fact that when we look at this matrix here from Tesla Chan, we see the other section of vehicles starting to explode again, the S's and X's. In my opinion, it's a sign that that wealthier demographic is deciding, you know what, interest rates are starting to fall, stocks are starting to go up, I'm willing to spend money again, and because I'm willing to spend money, I'm going to splurge on the X, or I'm going to splurge on the S, or whatever. I want a different car than the one everybody else is. Whatever. I think that's mostly a head trip. And don't get me wrong, I mean, it's like pot calling the kettle black, okay? I got a Model S and the Model X, okay? I just look at them and I have some regret because I should have just gotten two Ys. You know, I could have gotten two Ys for the cost of one of them. But they didn't have a Y or a 3 when I bought the X. So it was either the X or the S. I got the X. And then the Model S, I don't know, that was just stupid. But whatever, okay? Whatever. So I have to say, I'm not bearish on this earnings report. And given that Tesla has lagged the other Magnificent Six, bullish, my take. Maybe I'm biased, but I'm not nervous about this one.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than househack, nor am I presently acting as a market maker.